Trading is not as hard as everybody makes it out to be. You can do this. There is no doubt that with the right skills and training, it can be done. And we're going to cover some of the simplest things today while also looking at what do the markets look like they oftentimes do in February. All that and more on today's Market Brief. Hey, everybody. Welcome to today's Market Brief. My name is Chuck Fulkerson, founding partner and manager at TradersArmy.com and fund manager at Mainstage Capital Group. And one of the things I want to talk about today is the simplicity that exists in the markets. The simplicity that exists in the markets to remind you that you can do this. I think that one of the things most traders do is they overcomplicate it. They overthink what happens in the market versus what they need to do in order to address it. And today, that's what we're going to take a look at. We're going to take a look at a chart and basically just break it down in its simplest form. And when I say its simplest form, I'm simply looking at technicals. I think it's in the financial industry's best interest to make this challenging, to make people think they can't do it themselves, when in reality, you can. If you understand a few simple techniques and rules, and most importantly, risk management. Risk management is such an important key. You know, one of the things, for those of you that know me, that know us, we homeschool our kids. And one of the things I'm going to do is I'm going to start a trading class for my high school age kids. And I say high school, we're starting them in high school at 13 years old, 12 and 13. And we're going to start this and teach it for 12 and 13-year-olds and keep it simple. Because I think that if you keep it simple, anybody can grasp this. And that's really kind of our plan heading into the summer. So let me go to a chart and kind of show you what I'm talking about. But at the same time, look and see what may happen for the rest of February. Because historically, February is one of the worst months for the financial markets. Everybody thinks about October and they think about summer being down. But historically, February is pretty bad, and specifically the last couple of weeks of February. So let's go ahead and take a look at where we are today. So let me slide over and look at the charts. So the chart we're looking at here is the NASDAQ, ticker symbol NQ. So we're looking at the futures contract of the NASDAQ, and this is the daily chart of the NASDAQ. I'm going to slide over real quick and take a look at the weekly. And when we look at the weekly, remembering that each one of these candlesticks represents a full week's worth of trading time, the thing that I want to pay attention to is if you go all the way back to October the 30th, we have had essentially 3 weeks in the market that have been down, right? Going all the way back to October the 30th, we've only had 3 down weeks in the market, and really only 2 completed down weeks ever since our bottom. Every other candlestick has been solidly in the green. And one thing I want to pay attention to, though, as I take a look at this weekly chart, is not just the move up, but also where are some of the more obvious turning points as we have come up, and has the market respected a lot of those turning points? You know, as we look at how the market has rallied up, one of the things that is very easy to notice is that once the market, starting here in this bottom left right here, once the market puts in a high and then reverses back down, that area, and I'm not saying that exact price, but that area becomes a bit of a ceiling. And old ceilings, once they're beaten, become new areas of floors, right? So old ceiling becomes a new floor. We break above, we come all the way up to here. You can even theoretically talk about this area there, but I'm going to use this one here as probably the best one. Old ceilings oftentimes become new floors. This area here, there was a little bit of kind of sideways consolidation pattern. And so the last one, which remains kind of untested, would be this old ceiling, which became the new floor. And that is simply support and resistance. It's old school trading methodology around support and resistance. And if enough price action exists at those turning points, then that's why it's going to work. And so I think that looking at this, if I was talking to a 12-year-old, the next logical step would be what? Well, it would be that we're probably going to come down to here, and the old ceiling will act as the new floor and head back higher. And that would not be an unexpected turn of events in price at all. So what does that mean for traders and investors? Well, if I'm a trader or an investor and I see that this is kind of my next floor area, from current price to now, that's a decline of about 3% in the S&P on a weekly chart. If I slide this over to the daily, a couple other things that we'll notice. Look at the severity of our last few moves up, right? So this move up, let's actually let me do these in a so this move up was this length. And what I'm going to do is I'm going to make this green so that we can all see it very clearly and a bit thicker, right? Because I want to make it as simple and easy to understand as I can, right? Followed by this move up. Uh-oh, I've got to make my line a little bit longer, right? Followed by this move up. Uh-oh, I've got to make my line a little bit shorter. Followed by this move up. Uh-oh, I have to make my line a lot shorter. Okay? So if I look at just simply my moves up, and we were just to isolate those lines that I drew, right? Let's just isolate those lines that I drew. And now what we see is that my moves up are actually getting a bit smaller, right? My moves up are getting a bit smaller. So my momentum is weakening just a little bit. And with a weakening momentum, the next probable move is for price to continue to fall a bit lower. Now, I'm not saying that it's going to, because I'm going to trade the chart that's in front of me. But if I'm a day trader, right, if I'm a small time frame trader or a swing trader, I'm looking at the fact that my market is giving me now in a row 2 lower highs, 2 consecutive lower swing highs. I don't technically have a lower swing low as of yet, but I've got 2 consecutive lower swing highs. And so now I'm going to be on the lookout for the rest of this week and into next week for bearish opportunities when the market presents itself. In all stocks, certainly not in all stocks, but let's say that I'm looking at a stock right now like Snapchat, right? I'll use Snapchat as a great example. Snapchat had a strong gap down on earnings. It's sitting at a sideways price action. To me, this would be an opportunity to say, well, I've got a weak stock on weak momentum that already had a big gap down, and its inability to fill this gap, if we get below $11, then where do I think it's going to go? Back to our old ceiling and new floor. I bet you my 12-year-old son would say, well, Daddy, it's probably going to go back to here where there was an old school floor. Okay? Although he's 12, he doesn't call me Daddy anymore. But that's probably where he would look to say this is where price has a better chance to go. And so my thing behind this is simplicity's sake. I'm always going to start with the big picture markets. In this case, I'm starting with the NASDAQ, right? The NASDAQ giving me an indication of potential weakness over the next few weeks. And then from there, I can go and find stocks that already show a lot of weakness. And really combining those together is how we find good quality opportunities in any market condition. So if you have any questions, as always, send us an email, support@tradersarmy.com. Hope you guys have an amazing day. I will talk to you soon. See ya.